If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description.
Hello, Real Vision people. This is Sebastian Moonjava for Real Vision. And today we have a very special guest, Makoto Takemiya, and he is the group CEO of Soramitsu. Makoto, how are you doing?
I'm doing great.
I'm super excited to hear a bit about your project. But before we get into that, let's start with a little bit about your background, how you got into cryptocurrency, blockchain stuff, and let's hear a little bit about what you were doing before you got into this space.
Okay, well, let's start with my name. So as you might have noticed, I have a Japanese name, but I don't really look Japanese. That's because I grew up in California, but then I moved to Japan like 13 years ago, and then I became a citizen and changed my name. So that was part of a long journey, and during that journey, I got interested into cryptocurrencies. I was living in Japan at the time that Mt. Gox was at the peak, the crypto exchange, and it was very easy to buy Bitcoin, and I just became interested in it back in 2013. And as part of that journey, it really got me to question things about macroeconomics, like what is money, like what exactly is the utility, and how do you have productive economic growth? And that led me to some really interesting work. For example, the ideas of Dr. Richard Werner, who was also on Real Vision last year, I guess. And it's still a journey, and macroeconomics is very complex. I run a software company. I'm a computer scientist by training, but to me, any kind of complex system really can be studied in an analytical way, and I really enjoy thinking about the world in that way.
Yeah, that's awesome. So can you maybe explain a little bit about, I introduced you as the group CEO of Soramitsu. Can you explain a little bit about what a group CEO is, what that means, and then also maybe explain a little bit about the differences between Soramitsu, your company, and Sora, the protocol that we're going to be talking about?
Sure. So Soramitsu is the name of my company that I was co-founder of. And I started the company in 2016. And we were just a very small startup in Japan at the time. And now we're a group of companies, and I'm the CEO of kind of managing the group. And so that's what the group CEO means. So I actually started this company to focus on building blockchain technology solutions to help solve different inefficiencies in society. So, for example, payments is a big space that has lots of inefficiencies, and I think we've done a lot in that space. So we do quite a lot on the enterprise side. So we work with many institutions, even central banks. So we worked with the Central Bank of Cambodia, for example. We built a very exciting CBDC project for them, or with them. And we're also working on different kind of open blockchain or crypto ecosystem projects. So Sora is one of them. So Soramitsu is the company, it's the group. We do lots of different development for many different people. Sora is a decentralized world economic system. So it's no one's project, it's the universe's project, I like to say. So everyone is able to contribute to it. It's an open source project that aims to rationalize the allocation of capital in the economy.
So this is that what you would say? Because my next question was going to be, what problem are you solving? So can you just say that again? What is the big problem that you're going after?
Yeah, the big problem really is that most...
Hi, I'm Raoul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
Question was going to be, what problem are you solving? So can you just say that again? What is the big problem that you're going after?
Yeah, the big problem really is that most crypto economic systems, so for example, Bitcoin, they don't have a rational way to allocate newly minted tokens. And if you study the work of economists, the way you allocate money in an economy is actually quite important. And so you can't ignore that. And in Sora, what we wanted to do is combine like the really exciting decentralized properties of Bitcoin with kind of like rational allocation of capital that you see in the traditional economy. So typically central banks, have economic units that sit down and work on different plans on how to, well, in some countries, allocate credit in the economy. And this creates the whole world that we have, and it drives productive economic growth. And to me, creating a decentralized way to manage this is important, because if systems are too centralized, you do have some moral hazard where people try to use it for their own gain or for some some kind of political game that they're trying to play.
And before we get too deep into the weeds about Sora and the tokenomics and what its goal is, can we talk a little bit about, I guess, infrastructure? Like, how did you guys are a project that is hoping to build on top of both Kusama and Polkadot. Is that correct? And then, so can we talk about how you made the decision to be building using Substrate and Substrate is the programming for, can you explain a little bit about how you made the decisions and stuff?
Yeah, sure. So Substrate, just to be clear, is a toolkit for building blockchains, and it's made by a company called Parity, who's one of the co-founders of Polkadot and the ecosystem. Dr. Gavin Wood is one of the co-founders. He was from Ethereum. I think he was also on Real Vision a few weeks ago. So yeah. So Parity Substrate is a toolkit. You can use it to make your own blockchain. You can combine different pieces and you can build your own parts. And that's what we did with the Sora network. Was we actually just launched recently in April. And what we did was we took Parity Substrate and we added our own code, our palettes, and this created the ecosystem. And the reason we use Substrate is because it's kind of native for the Polkadot ecosystem. So what that means is Polkadot and Kusama want to have what are called parachains. And the goal really is to create many different networks that can each have their own systems of governance and their own ways to do, to do innovation and to move forward in a faster way without having just one blockchain. So what you have is many different blockchains in an ecosystem now. And I think this is important because blockchain maximalism, or being too focused on one specific technology or one specific protocol actually does slow down innovation quite a lot, because if you want to upgrade the protocol, you have to talk to all the miners and you have to get them on board, and it takes years to do this. And so Polkadot aims to make it more decentralized from a governance standpoint, where every different kind of grouping can have their own governance and they can have their own chain, and then they can all work together and communicate together through what's called a relay chain. And so you have all these different parachains that are connecting through a relay chain. This would be a Kusama relay chain or Polkadot relay chain. And to me, that's a really exciting ecosystem, and it's really quite logical. To me, it's the obvious future that you have to have. It's not. When I first started into blockchain, everyone was focusing on, Bitcoin, and then a few years later came out Ethereum. But it's really not a winner takes all. You have to have many different groups that have their own needs and their own, their own politics, but you have to provide a protocol for them to work together. And really, that's what the Polkadot and Kusama ecosystems, offer.
And so if I'm understanding correctly from what you just said, it sounds like the key points here are that you wanted to have flexibility to govern your own chain, right? Is that an appropriate statement? That sounded like a big reason why you guys decided to build using Substrate.
Yeah, exactly. So, for example, we care a lot about economics, and we kind of feel that we needed to have our own network because previous networks, like Bitcoin or Ethereum, kind of have a bad economic system from an economic rationalization standpoint. So what we wanted to do is actually have our own governance, have everything in our own little, almost like a city-state type of thing. And so governance is really key, and that's one of the big driving factors in having our own protocol.
Also, so let's start talking a little bit about like the tokenomics, or like what's the point of the XOR token, and maybe talk a little bit about how this plays a role in minting or governance or all of these things.
Sure. So XOR is the native token of the Sora network, but it aims to be much more than that. It aims to be a unit of account, store value, and medium of exchange. And other cryptocurrencies, I'm sure, have tried to do this, but the economics are not as good. So if you have high volatility, it's really hard for people to use this in daily life, right? And so what we did was actually we worked with an economist several years ago, and he proposed that we use what's called a token bonding curve to manage the token supply. So in any economy, managing the amount of circulating money or tokens, it's really hard to get it right. You have to have some kind of approach, and the market-based solution seems to be the best type of approach because at least it gives some kind of clear and transparent way to make this decision. And so token bonding curve lets you do that because it's a smart contract that you put in some reserve token, and then you get maybe newly minted or newly allocated like units of this token. And in our case, it's XOR. And the opposite can also happen. You can put in the XOR into the smart contract, and you can get out the underlying reserve assets. And so we try to use liquid reserve cryptocurrencies like Ethereum and or ETH, and DAI. DAI is a decentralized, so-called stable coin. And so the key point, it's not, I'm sorry for being a little bit too technical, but the key point of this is that it provides some stabilization, because the smart contract gives you a clear buy function and a clear sell function. So it gives you a price you can buy new units at and a price you can sell these units at. And you can have a margin between the two. It doesn't have to be the same. And we use a 20% margin. And we use this margin between the buy and the sell to stimulate secondary markets. And then also, when you get new units of the token, we overmint by 20%. And this extra overmintage is what we use to allocate to productive projects.
And so to make sure I'm understanding correctly, you were saying that you guys utilize like things like ETH or maybe Bitcoin as your reserves. So the protocol Sora is getting or receiving collateral, basically, when people are saying on this bonding curve, they're saying, hey, I would like some XOR. And so then they would put in some ETH into the protocol, and they would receive XOR tokens. But that ETH that they traded in would actually be in control of the protocol, that it's actually being held in reserves by governance. Like it will be governed, right? All of these assets will be owned by basically the Sora network, and then you guys are minting. So it is backed currency. Is that an appropriate way to look at it?
Well, it's not aimed to be like a fully reserved currency, but it is. The aim is to have certain guarantees about liquidity, because if you don't have convertibility into other currencies with some guarantees, then it's hard to bootstrap the value process, right? Value creation process. And so that was the key motivator. So it's kind of like it's like training wheels on a bike. In the long term, when the ecosystem becomes big enough, this won't really matter, because you'll have self-sustainability. But that could be 30 years even.
It's to keep it safe and secure and healthy and productive along the way as you grow your ecosystem. Is that
it also should help dampen speculation, and which can be harmful in some circumstances, and also manipulation of the markets. So a good example would be Soros breaking the Bank of England. Currency speculators would have a harder time crashing or breaking the peg. That's not a peg, but breaking the price and destroying confidence in the token if there's some reserves, right?
Yeah. And when I was reading through about the project, I read about this, and I don't know if you guys are supportive of this idea or whatever, but like a decentralized autonomous economy. is kind of what you're going for, right? Like, I think maybe our audience might be familiar with the decentralized autonomous organization, but you're kind of saying that this is going beyond that, that Sora is trying to create an entire economy or ecosystem within itself. And so can we talk a little bit about, like, I know you had said this before, but efficient capital allocation. And I believe in our conversation previously, you had mentioned about like Japan and the way that it kind of planned its economy and the efficiency of their capital allocation as opposed to other things. Can maybe you talk a little bit about that?
Well, yeah. So Professor Werner goes into this a lot in his work, and his theory is called the disaggregated quantity theory of money or credit. And really, it goes like this: that you can create new purchasing power, and you can allocate it really in three broad categories. The first would be consumption, and if you do that for consumption, then the price of whatever you're consuming is going to go up. The second category would be for speculation. So, for example, asset transactions. If you buy some kind of asset with newly created purchasing power, the price of the asset is going to go up. And the third is if you create new money and you do it for production of new goods and services, then you get new goods and services. It's quite simple. But the first two categories are actually quite detrimental to the overall economic health because they're not sustainable. Because if you have a credit-based system, you have to have higher returns, and it becomes, kind of like a house of cards that will eventually collapse under its own weight. And so this is nothing new. And Richard Werner, talks about this, and lots of other economists in the early 1900s, late 1800s knew about this as well. But the example that he uses a lot in his books, for example, his book, New Paradigm in Macroeconomics, which I highly recommend, he talks about how the Bank of Japan used credit window guidance to guide the creation of new credit by commercial banks. And this basically was a way to design the economy at a high level. Whereas the Soviets would focus too much on the small details, like specific items and quantity, the items that had to be created in a fully planned economy. And whereas in a fully, decentralized, I don't know how to say, a fully free market economy, you wouldn't have any planning at all. It's just the speculators who run the economy. Japan kind of took a middle ground, and they created a kind of like broad sectoral, broad sectors in the macroeconomy, and then they just kind of stimulated these different sectors. And this has also been used by many other central banks around the world. It's kind of frowned upon nowadays as a way to do monetary policy, but it was extremely effective, and it created sustainable economic growth and production without having high income inequality, for instance, because you're not minting money and giving it to speculators, which many central banks do today, including, the Bank of Japan. Many central banks are buying ETFs and doing different things with newly created purchasing power. But just to give a bit of history, all this goes back to early 1900s with Irving Fisher. So his equation of exchange. So the money times the velocity of the money has to equal the quantity of goods and the prices. So basically, this mass of money has to equal the amount of goods. And if you don't have this kind of equality, then you do have different detrimental policies in the economy.
So it sounds like that Sora is aiming to sort of become its own decentralized central bank. Would you agree with that statement? And can you maybe talk me through like how you view how it operates, or this like central bank-esque model?
Well, that's quite an ironic term, but yeah, that is, I think, a very approachable way to think about it. So the idea is to create something like a central bank that does, strict planning and economic rationality, but at the same time, it's not controlled by a single unit or individual. Rather, what it would be is you have a clear mode of democratic governance, and then this democratic governance can decide on how to allocate. you can actually use this methodology to mix professionalism with democracy. So you don't have to have just a direct democracy. There's other approaches, and I'm happy to talk about it some more. But yeah, that's kind of the goal. So you have a way to democratically create and allocate tokens. And it's important to have this democratic accountability because when you create new tokens, you're kind of socializing, temporarily, you're socializing the cost of doing that because you're inflating the token supply, right? But long-term, the benefits to the economy should be much higher than the short-term losses.
Yeah, so do we think, well, I guess let's talk a little bit about the governance and how Sora would actually be implementing some of these stimulating features that you're talking about.
Yeah, so we spent quite a lot of research studying political systems as well in order to come up with a proposal for what's called the Sora Parliament. So the Sora Parliament is greatly inspired by Athenian democracy and the work of a political scientist named Parachains, who studied the role of sortition in Athenian democracy. So for those who don't know, Athenian democracy, most people learn a really distorted view in school. That's not really true. They kind of learned that it was just like a direct democracy, everyone is voting on everything. But that definitely was not the case. And even in Athens, the system evolved for over 200 years, and it became quite efficient at the peak. And is based really around three main principles. The first principle is that all citizens have an equal right. So this is like, not everyone is a citizen, but if you're a citizen, everyone has equal rights. Everyone has the equal right to contribute. And then everyone has like this, the right to contribute equally. So no one has like special voting power. People also, everyone, if you want to participate, you can participate. That was two of the main principles. And then finally, they didn't really have fully worked out probability theory at the time, but they used sortition machines, and they randomly chose people from the citizens to sit on different panels and make decisions. So this principle of probabilistically or randomly choosing participants is a way to kind of prevent different kind of coordinated attacks on the political system. So these three principles put together is really at the core of what we call the Sora Parliament. And the big vision really is to create a way so that you can become a citizen by staking a bond. You take some Zor tokens, you stake a bond. That's how you do it on the blockchain world. And if you do anything bad, you lose some of that. You get slashed. But once you're a citizen, you're randomly chosen to perform different functions within the group, and you have a multi-body system. So some people are making proposals, some people are checking the proposals, some people are studying them, some people are writing the reports, and some people are actually voting and deciding on the proposals. So you kind of split it up so you don't have any single person or entity who's making all the decisions. And this, multiple deliberative stages can give higher quality decisions in the end. So that's what we're building. It's quite I would say a huge vision. It's a real vision, but we hope it'll be created.
And so how would that democracy, would they have the power to be, again, we talk about like minting new tokens to push towards productive resources that would be beneficial to everybody within the society, right? So is there like, maybe can you walk me through how maybe a proposal might pass, and also like what are the outcome potentials, meaning that they're able to vote on where capital allocation goes, talk to me a little bit about that.
Yeah, sure. So I'll try to give a specific type of example. This hasn't happened yet, but I can foresee it happening in the near future. So recently, the community voted to establish something like a sovereign wealth fund, where we have a set of tokens that were set aside for the parliament. The community decided and voted on creating a venture capital fund, basically, that would take these tokens and invest for equity investments. The way this would work in a decentralized manner is that you'd have this venture capital fund, going out, doing their job. They're professionals. They do due diligence. They would find high quality investments, but they're not allowed to make the decision. So what they do is they write up a proposal. They submit it to to a panel that's like setting the agenda of the current, session of Parliament, and this panel will look at it and say, is this something that we should deliberate further or not? And they would vote inside their little panel. And if they accept that, then it goes on to the next stage. And the next stage, you actually have to study this in detail and write up reports. And so you'd have different volunteers, probably people like experts, maybe people from the fund would volunteer to write up reports. And they would write up reports of different opinions. And then finally, you'd have a review panel that would be randomly chosen from the citizens. And these people would read these different reports and create a summary report that has the pros and the cons. And then they give this to a panel that actually makes the decision by voting. And so at each stage, you have different citizens that are randomly selected just to review this topic. And it should yield hopefully high quality results, because it's a very interesting hybrid system, because you're mixing centralization in something like a venture capital fund with this decentralized deliberative parliament.
Yeah, and you I think this was from a previous conversation that we had about you had already brought this up and mentioned this already about how the efficient allocation of resources, right? And so you had mentioned the Bitcoin's approach when they're putting their capital allocation out, they are basically distributing it to the people that are contributing to the security or to the mining, right? Like that's the Bitcoin approach. And you had mentioned that this is special, that this is kind of like the CPU of the economy is what Sora is trying to become. And so when I look at this is basically because you guys are getting the collaborative security from substrate or from because you're aiming to become a parachain, and you don't need to actually distribute this capital for that security, because if you get a parachain slot, then that will already have been taken care of. So then you can begin to allocate capital in ways that are productive for all of the citizens of Sora. Does that make sense? Is that an appropriate summation of?
Yeah, that's a really good summary. So I think when we talked before privately, so Bitcoin and more legacy proof of work blockchains, they really focus all the economics on these kind of like elite classes of miners who make all the decisions. And at the end of the day, they basically make all the decisions, and you give them all the money, right? So it's kind of like a skewed system. And the cool thing about DOT and Kusama is if you do have this parachain, you can give transaction finality, the security of that to the relay chain. And so you can actually kind of, like you said, offload that, and you don't have to incentivize your local validators as highly.
And so we have, our audience is, we had the video with Gavin. So our audience is somewhat familiar, but can maybe in your own words, can you kind of explain a little bit about what the parachain is, and about what a little bit, briefly on the process that you guys will have to go through to be a part of, to become a parachain?
Yeah, sure. So, parachains, like I said, they're kind of like little city-states that go off a relay chain. And this is only interesting because you can do messaging between different parachains. So this is a cross-chain message passing protocol. And what you're able to do is you can move in, once this is operational, you should be able to move an asset from one chain to another and then move it back and do this very efficiently. You can also combine some of the processing space of the two parachains. So you can have one parachain that specializes, for example, in privacy or encrypting transactions or doing things like that. But you don't actually have to move all your assets to this other chain, do it and come back. You can actually kind of combine the different spaces together. So that's something that's being worked on as well in the parachain space. We expect parachains to be launched pretty soon. Things are looking very good. We actually have some people on our team that spend full-time just working on setting up our network, getting it ready to become a parachain. There's a few technical hurdles because we do have a running network now. So we have to figure out, should we build a bridge to our parachain network and just move assets that way? Or should we try to find some other way to upgrade because we have to change the consensus a little bit to become a parachain. And then economically, parachain slots are limited. The reason they're limited is because all this processing that's going through the relay chain, it has different, limits. Like you can't have an infinite amount of chains because it would slow down the network for everyone, right? So what you do instead is you have a fixed number of slots and you auction them off. And you never actually buy the slot, you're just renting it. And you can rent them for up to 2 years. And so what we need to do is get enough Kusama and DOT tokens so that we are able to win a parachain slot. And so our goal, it kind of goes back to what we were saying earlier about the token bonding curve and these assets being assets of the ecosystem. So DOT and Kusama will be reserve assets of as soon as we set up our bridge to these networks. And so what we'll be able to do is build up vast reserves. That's kind of like an ecosystem wealth fund of DOT and KSM, and then we can use that through governance, like the governance process. Well, maybe not as complex as the parliament, but we can use a governance process to be able to apply for a parachain with these assets.
And for our audience, and also for my understanding, like that you do have to enter a bid, right? Like you're going to be competing sort of in an auction against other people. And I would love to hear from your perspective, like, do you think that this is going to be highly competitive? Like, are you going to have to wait multiple rounds? Are you waiting to throw your hat in until some other time down the road, or you're eager to jump into an auction as soon as they start? Or
well, I'm not going to say my whole strategy.
Okay.
But I'll just say that, I think they'll be very competitive. Lots of people want chains, a parachain slot. And I think, looking at general macro market conditions of the crypto market kind of it gives a few indicators of when the best timing might be.
Yeah. But I think it's worth noting, you're like, well, I'm not going to explain my whole strategy. It's because it is also competitive, because there are, And so I think that's a really interesting dynamic for all of the parachains. And I do believe that that's really healthy for the ecosystem, because we are going to see, the whatever the community, the Kusama Polkadot community sees as the most valuable or important to the ecosystem, those are the ones that are going to get pushed to the front. And I think that's really an exciting thing.
Mm-hmm. I totally agree.
Maybe let's talk a little bit about some of the DEXs and stuff that are going to be popping up or have been popping up that are going to be utilizing Sora.
So the Sora network, just recently launched, and on top of that, a DEX launched called PokeSwap. And I had the honor of being one of the contributors to the PokeSwap project, and it's quite. I'm still a contributor. It's really quite a complex project, and it's really fun and interesting because it incorporates our tokenomics directly into the DEX. So for those, I think everyone knows what a DEX is. It's a decentralized exchange. The key point is that there's no centralized infrastructure. So everything is self-custodial. You don't give your tokens to anyone. You always keep control over them yourself. Everything is on chain. Even the website is decentralized. So we use IPFS. So there's no web servers anymore. It's quite an interesting world. And so the clients, the front end clients, work directly with the blockchain node, and you can even set up your own node and connect directly to your own node. You don't even need anyone else, and that's really cool and really bounds pushing technology. But what's even more bounds pushing are the tokenomics of the system. So in PokeSwap, we have what's called a token bonding curve, and like I already explained earlier, and that manages the Sora token supply, and it's built right into the market. And there's a transaction or trade routing algorithm that automatically will fill your order, even with a mixture of token bonding curve supply and secondary market. So it's kind of like gives you like a really nice price quote. And like when you're trading with Zor, and on PokeSwap, all the token pairs are with Zor. So it's kind of like a very nice integrated ecosystem. So when you're trading with the token bonding curve, it can get automatically executed and fill part of your order, and that's interesting because the token bonding curve is able to mint tokens. So it's like a decentralized central bank, like we talked about earlier. It's able to actually inject new purchasing power into the ecosystem, and it's able to also take it back. So if the price goes too low, it's able to use some of the reserves in the ecosystem to buy back Zor, and then take that from the users, and then it destroys them. So it's an elastic way to manage the currency supply.
But one of the unique kind of features of the I don't know if this is happening now or what the state of it is at the moment, but from my understanding, that one of the beauty of PokeSwap is that you will be able to basically do cross-chain assets, right? You will be able to utilize maybe some other PARACHAINS tokens and swap easily between them, or ERC20 tokens can eventually be able to be swapped as well. So this is kind of like a interoperable or cross-chain sort of Uniswap. Is that how you kind of look at it? Because I mean, this is the name that people know of when they think of DEXs, but it does have some advantages over that. Can you talk a little bit about that, or how you maybe might see comparisons?
Yeah, that's totally the goal, to be able to create something that is really like an interoperable DEX that would be able to source liquidity from many different liquidity sources and then automatically like route the trades. So like a DEX combined with like a cross-chain aggregator, basically. So it's really ambitious. What we have today is a bridge with Ethereum. So we're able to move tokens from Ethereum to the Sora network and then move them back from the Sora network to Ethereum. We're going to have the same bridge to other EVM-based chains soon. This is like, level 0. This is like the very basic operation where you can just move tokens back and forth. In the future, we want to make it so you don't even have to move the tokens. So if you have liquidity pools like on Uniswap or something, you can just execute atomically across them. But this takes some time. We think that using XCMP and Spree as part of the parachain framework, that it'll be easier to do this inside the Polkadot ecosystem first. And so that's what we're also focusing on. That being said, it takes a lot of time to build this infrastructure and to test it and everything. So it's going to be a long journey. And fortunately, it's not just us or me contributing into it. We have a really supportive community that's able to help us a lot, and the community is even contributing different things. There's, I think, some other projects that are planning to build on our networks too. Like one of them is a project that is a system that will lock up liquidity on the DEX, so that people who raise funds on the DEX can't just take it and leave. So it gives like different opportunities for for crowdfunding and things like that. And it's a great way to show the extensibility of the Substrate ecosystem as well.
We had talked a little bit about also because you guys are going to have the DEX that's going to be on top of it. We also had briefly mentioned like synthetic assets, but really quick before we talk about some of the other interesting things that you guys might be doing is just for our audience, I want to make sure that we're explaining kind of like the layering that's going on here. Is that if Kusama or Polkadot Substrate is kind of like the base layer where you're kind of getting security, and where Sora is built on this Polkadot Kusama layer, right? And then something like PokeSwap will be built in on top of Sora, and Sora has its own programming language. Kind of, is that correct? Is this, because I just basically wanted to explain the base layers like Polkadot Kusama, then we've got Sora on top of it, and then on top of that we'll have DEXs and synthetic assets or whatever. Is that an appropriate way to explain it?
Yeah, so that's exactly right. So you kind of have like the relay chain as like almost like the 0th layer, and then on top of that you have your own layer 1 network, and then on top of that you have apps or different dApps, right? And then you have you can build different apps using kind of a programming language
So PokeSwap is one example of on this top layer with the app layer. And then again, we had mentioned, is there a plan to have synthetic assets, and what are synthetic assets, and what is the utility? What's the goal for that?
Yeah, so I'm sure there's different definitions of synthetic assets. I'll tell you what I focus on, or what's interesting, and that's kind of like pegged indexes, so like to different currencies or things like that, or even not even like a fiat currency, but like an index, like the UNIDAD in Chile. Yeah, so let's take a step back. So really how this fits into the blockchain space is you have many different currencies all around the world, all these different fiat currencies, right? And they're all trading at different rates. They're free floating, and really, what I think is really potentially interesting or helpful for humanity would be find some way to easily convert between all these different like fiat currencies or fiat units of account. And the reason that's interesting is because, for example, in East Africa, many different countries trade directly with each other, but when they want to, and they have a very good, efficient settlement system in their own currencies. The problem is there's not much liquidity between these currencies. So they all go to US dollar and go through CLS Bank and then come back, even to make like a transaction next door. So I think there's a lot of potential, especially for international trade, if you can create a way to kind of like digitize these different units of account and then be able to kind of convert between them. And that's an idea that we're still toying with and designing. But the idea really would be that we'd have different things that are called oracles. An oracle is something that's taking data from the outside and bringing it into the blockchain space in a verifiable way. So you have like a price feed basically saying, I don't know, Japanese yen is like 100 yen to the dollar or something. You get this, you put it in at some specified interval, and you have your price feed. And what you can do is you can say from another asset, like let's say Zor, you can create a synthetic asset. Like if I have $100 worth of Zor, I could create, like in theory, $100 stable coin, and then the next. So that's the basic idea. But you can actually take this a step further. You don't have to have. If you have the power to mint tokens, you can actually guarantee these synthetic assets the value without over collateralization. So what I mean is, like, if you have like this token that's like an IOU, let's say for $100 worth of Zor, you don't need to have the $100 worth of Zor anywhere. You can just mint it on demand, right? Now there should be rules about this, otherwise you get inflation, and you don't want to do it in a weird way. But what can be really cool is you can basically have this promise to mint Zor on demand. And once you do that, you kind of project fiat currencies or any type of asset that has a price feed onto this like meta level. And when you're in this meta level, you can convert between them in this like kind of like a space. You can convert geometrically. You're not bounded by liquidity anymore. You're only bounded by liquidity when you enter and exit Zor. So that's something that we're looking at. A lot of these ideas are actually also inspired by Irving Fisher. He wrote some papers in the early 1900s about stabilizing the dollar, because the dollar used to be backed by gold, and people who actually study history know that gold was not a stable unit of account. The value would change quite a lot. A stable store value, sorry. The value would change quite a lot over time because of minting. And the late 1800s, industrialization brought new innovations into mining gold. And the gold supply in the markets was very volatile. And so what this meant is that the purchasing power of the dollar, which is backed by gold, was also extremely volatile. So Irving Fisher said basically, the Fed should buy and sell gold so that the amount of gold backing the dollar is kind of pegged to an index, so a purchasing power index. And so that's kind of the idea. So Fisher, it's hard to buy and sell gold in a fast and efficient way, and he was saying they should do it just once a month, which probably wouldn't be enough. So no one actually did this idea or took it seriously, but now blockchain and digital assets gives us a way to kind of create this type of system. So yeah, that's something we're researching.
You had mentioned, and I think it's worth noting, I don't remember what you had said previously, but I'd love to hear a little bit more about this. The UNIDAD fundamental, the index of goods. Can you explain a little bit for our audience what it is and how, like, again, you think about that related to the Sora project?
Yeah, so right now, just to set the stage of what I was thinking of, the US dollar, or basically DAI, which is a dollar stablecoin, it's kind of the unit of account that's used for the token bonding curve. So when the token bonding curve gives a quoting price for ZOR, it's based on DAI, or proxy of US dollar. But what happens if fiat currencies are unstable? What happens if I don't know, like some major economy or banks crash and purchasing power changes? That would hurt our ecosystem too, even though it's kind of exogenous to what we're doing. So one idea would be to maybe there's a way to kind of peg this to purchasing power. And so I looked through literature and found what's called the UNIDAD de fomento, which is the unit of value, I think is what fomento means. And it's an index that's created by the Chilean central bank, and it's pegged really towards index of common goods, like household goods, basically. So it's linked to purchasing power, and they have this this factor that converts between the peso and the UF. And they update it daily, this conversion factor, and then every month they do updated the weights. And what this does is it gives you a way. It gives you kind of like a unit that's pegged to purchasing power, which is kind of cool. So if you can convert from dollar to peso and then peso to the UF, you can build this link, and you can then give the price quotes and stuff in like in a way that's more stable and in a meaningful way to humans, because we don't really care about dollars or yen or euros. We care about, can we buy, I don't know, like some beer and a loaf of bread? I don't know. So that's a good short-term solution, I think. It has its downsides, and one downside is that it is centralized. So the Chilean central bank, could if they wanted to tweak with our economy, they could do that in theory. And there's lots of other downsides. So it's kind of localized only to Chile, which maybe is not ideal either. There could be, maybe because of the geography, maybe there's some disasters. I hope not. But that any kind of localized problems would affect that. And so the Sora Parliament, it'd be really great if they could maintain this type of index all around the world and do some, averaging so that you do get kind of like a more global and meaningful, unit.
Would you imagine this thing for the Zor token, or would be another protocol on top of Sora?
Yeah, this would be something that would be built on top of Zor. And the Zor token bonding curve should utilize this. So I think there's no risk of dollar collapsing in the short term. Knock on wood. So I think we have time to to kind of figure out the best way to do this. But yeah, I think something like the UF is really interesting and could be really valuable for creating like a system that's a little bit like insulated from external shocks.
Yeah, great. Well, we're starting to get low on time here. I just wanted to see if there was anything that we haven't covered that you thought was important and worth noting.
Well, yeah, I mean, I could talk for hours probably. I'll just say that it's surprising how few people really understand economics, especially macroeconomics, and a lot of things that intuitively you would think about macroeconomics turn out not to be true because of for example, everyone is kind of taught from a small age that free markets are the best and most efficient, but that's not really what reality shows us. And so it's always important to look at data and analyze it in a logical way when you're trying to make some decision. And that's really what I found appealing by the work of Richard Werner, who's interviewed by Raul. Not Raul, but the other guy.
Ash, probably Ash, I assume. Yeah.
Last year. So which was an amazing interview. Check it out if you haven't watched it. But I really like how he focuses on empiricism. And that's really, really important when you're designing any kind of token or any kind of economic system.
And would you say, and it sounds like it from, our conversation and kind of reading through the documents, like that is Sora is trying to sort of implement these things, or like that's the ethos, and correct me if I'm wrong here, but it sounds like that's the ethos that you're trying to encourage. It's like, let us begin to build based on what we, real evidence that we have, and trying to make productive decisions.
Yeah, it's kind of, to me, it's a project that is kind of like a commons for humanity. So that when many monetary authorities around the world are maybe taking suboptimal paths, maybe for whatever reason, having this kind of like safe space that's not controlled by anyone, that's kind of controlled by everyone, and very clear rules and predictability. I think that can give a lot to humanity, and especially if we want to become a multi-planetary civilization, you have to have that, right? You have to have some way to not have like a centralized system. You want to actually be able to have many different actors around the world, or even other worlds, participating and managing this.
Yeah, neutral territory is important.
Exactly.
Great. Well, I think we'll be watching your project, and thank you so much, Makoto, for coming on and helping educate our audience about the projects that you're working on. We also touched on PARACHAINS and Kusama and Polkadot, so a lot of information here. Hopefully, in the next several months, that you guys will be having your PARACHAIN, and we can bring you back on and talk about the progress that you guys have made.
Oh. That would be awesome. We do many other things in the Polkadot ecosystem. So also check out Fearless Wallet, which is a wallet that is open source and free to use. It's really, I think, the best wallet in the Polkadot ecosystem as well. So check out what we do.
Perfect. Well, thank you so much, Makoto. Thank you for coming on.
Yeah, thanks.